So yeah, so there's banks, institutions, and retail traders. What I noticed on the trading floor, which and my job was to facilitate institutional order flow. I would take orders every day for banks, institutions, money managers, hedge funds, you name it, and some retail traders. And what really jumped out at me in the beginning, and what really hooked me into this business, was the simple fact that I noticed that banks and institutions were right in their decision-making process most of the time, and they tended to make quite a bit of money as a whole, right? They tend to make a lot of money. At the same time, I noticed that, individual traders and investors, right, like retail traders and investors, were equally wrong in their decision-making process most of the time and tended to lose lots of money as a whole. And I was absolutely fascinated by that. Okay? Absolutely fascinated by that because, and I didn't really understand it early on because I thought, how can this be? How can one group be so good at this and the other group be so bad? And yet they're both buying and selling in the same market. That's what was confusing for me. I said to myself, they're both buying and selling in the same market. How can one group be right most of the time and make all the money, and the other group be wrong most of the time and lose most of the money? So, again, being a young 20-something and wanted to kind of figure all this out, I thought, boy, if I could just learn, what banks are doing, where do they buy and sell, and why do they buy and sell there, and all that, then maybe I can make that kind of money. Maybe I can be that right. Well, what I didn't do was study anything fundamental, economic reports, you know, anything like that. Economic reports, news, any of that stuff. I didn't spend a minute on that because I had the orders in front of me. So I said, okay, I understand exactly why prices turn and move in markets. When prices decline in a market and reach a price level where demand exceeds supply, and I mean objectively, like for sure, on a trading floor, you know that. You have the orders in front of you, right? So I saw that. I said, okay, I see prices are falling. It's going to stop right here in the yen because I have a giant stack of buy orders here, and we're the biggest trade desk on the floor, right? So, or one of them. So, okay, I have a giant stack of buy orders here, and my Goldman Sachs buddies next to me have an even bigger stack at this price level. The yen is going to stop falling here and turn higher. It has to. That's where the floor is. So sure enough, that's what would happen, and that's what would happen every time, right? So how the whole game worked, I got that. So where I put the work in was to say, okay, all I need to do is figure out how to see exactly that on a price chart and nothing else. Absolutely nothing else. Because you have to remember, by all the time that I spent on a trading floor and a trade desk, watching prices move from real demand to real supply, in other words, where banks are buying and where banks are selling, the whole time I witnessed that and lived through that, there was plenty of news coming out and plenty of economic reports coming out, right? There was plenty of stuff during that time. Back then, people watched other things too, like money supply and all that. Remember that? Anyway, all those reports and numbers were coming out, but I didn't pay attention to that. I didn't even realize at the time all that stuff was coming out. But did it matter? Did it change anything with regard to where price was going to turn and where it was going to go? No. What caused that was where the buy orders are and where the sell orders are. So if we could just focus in on that picture and that picture alone, that's a big part of this. So, but then I thought, wow, well, so what are these retail traders doing to just consistently lose the way they do? And how come the average investor around the world never, matches the returns of the markets? And so on and so forth. And why is there such a giant gap between those who make money trading and those who lose? And now that was 20 years ago. So you tell me, what do you think's happened to that gap over the past 20 years? Has the gap gotten wider or narrow between those who make money and those who lose? It's gotten much wider. Yeah, just look around the world, right? Those who have money have a lot more today than they did back then. The middle class is basically, I travel around the world all the time, and the middle class is becoming smaller and smaller and smaller. In most countries, there is no middle class anymore, right? It's those who know what they're doing and those who don't. So I want to spend time here now. Let's move forward, focusing on exactly what that picture looks like. Before I do, real quick. At Online Trading Academy, I'm responsible for the education and the tools and services that we produce. So what do you think was, so understanding how I started, which is really having, bank buy and sell orders in front of me. What do you think one of the most important services or tools is that I'd want to build for Online Trading Academy? Well, how about something that just tells you where the orders are or gives you a very good idea of where the orders are? That's the supply demand grid that you see on the screen. We're going to see a bunch more of these in just a minute. But I just want to introduce this to you because you're going to see this on most of the trades that we take. So each morning, I have a very small team that puts this supply demand grid together for 20 of the major markets around the world. And all this is meant to do is, again, where are banks buying and where are banks selling? Okay, orders, supply and demand. Let me run you through the basics. We only have a short period of time together, so because of that, I'm really focused on giving, going over the really important information. So in the short period of time that we have, okay, what are the two things or three things that I can give you to really convey this message and strategy to you? Well, the two that you see on the screen is where we're going to start. Number one, how do we identify demand and supply on a chart? When we say that, when I say supply and demand, I'm not interchanging those words for the terms that you're used to, which is support and resistance. That's conventional technical analysis, which again, in my mind, is a very flawed school of thought for a lot of reasons. And I'll explain that more in just a little bit. That's why you don't see many people making a consistent low-risk living year after year trading, using the rules of conventional technical analysis. And I'll explain why in just a minute. Okay, so I just want to make sure you understand, for those of you that are new, when I say supply and demand, I'm not interchanging those words for support and resistance. Very different school of thought, very different rules. So we'll start to identify those in just a few minutes. Number two, you really need to focus on something that I've been alluding to since we started, which is understanding who is on the other side of your trade. It's a critical piece of trading, and I don't see people focusing on it enough. In other words, when you buy, who is the seller and why are they selling? When you sell, who's the buyer on the other side of your trade and why are they buying? Okay, we have to run through this little small checklist during the learning period to make sure that you're buying from and selling to the right people. Okay, make sense? All right, so let's go over that. Let's start with number one, understanding supply and demand. So we're looking at a candlestick chart here, but whether we're looking at a candlestick chart, bar chart, line chart, point and figure chart, volume chart, whatever, it doesn't matter. Okay, so what we're focused on is the price activity, where price is trading at, and almost more important, where price is not trading at. And I'll explain that in a few minutes. But how do I identify, where these orders are by looking at the price action and price action alone, which is the theme, obviously, of what everyone's talking about today at FXStreet. Okay. The patent number, sure, I'll show that again just at the end, okay? Okay. All right, so notice price is trading sideways here on the chart. Supply and demand appears to be in balance. Truth is, behind the scenes, it's not a balanced equation. It's an unbalanced equation that takes a certain period of time to play out. Once prices fall, and then notice prices fall away from this level. Okay. Now, when prices fall away from this level, understand we're not trying to predict that decline in price, and we're not trying to make money when prices drop there. Instead, we let it happen because that gives us all the information we need about this level up here. When prices decline away from that level, we understand that that happens because supply exceeds demand up here. What this looks like behind the scenes, right, the order flow that's really creating this picture is that, right here, when prices drop, your last buy order is filled, and you have a significant amount of unfilled sell orders left. Anytime that happens, price is going to fall. It has to.